current charts. So let's see. I'm looking at the questions here. Okay, everybody, does everybody see that the PowerPoint was posted? I guess next time we should probably do that in advance. And anyway, at least you have that to go back and look at. So let me see where the questions are. Okay, there's one question. Using the setups, how many trades are signaled per day for each market? Let's see. I would say per market, it can be anywhere from 2 to 10. Now, the ones that would get more setups would be the ones where I'm doing more than one time frame. So, for example, if I'm doing the euro and I'm doing a 15-minute chart, there might only be, 2 setups during the trading session for a 15-minute chart in the euro. But in the S&P, for example, since I'm doing both the 15-minute chart, also, looking at some of the higher time frame charts, and I'm doing a 3-minute chart, so you're getting like setups that could also be fitting in the larger setup. That's when you can get quite a few more entry setups. So that would be maybe you'll get 6 in the S&P. It really depends. If it's a really good trending day, you'll get the higher amount. But I'm doing quite a few different markets, like the gold market, the euro, the NASDAQ. I'm doing the Russell mostly for Denise because she likes to trade that one. I said gold and the bonds. Bonds have been pitiful in the last few trading sessions, though. So anybody who's trading bonds, was looking for a different market to trade. Let's see what other questions I have. Okay, question is, does my plan vary by time of day? No, it doesn't. I mean, it's the same, same type of trigger. Some people will choose to, for example, not take a trade in the doldrums because, it's lunchtime and there's a higher probability that you're going to get knocked out. Okay, so some people might write that up in the trading plan. I'm not trading, at that time. I actually take a break for, half an hour to 45 minutes, each day. So I'm not even going to be around to do the setups at those times, but sometimes levels will still be there and people will trade them. Okay, another question is, do you use the same kinds of setups with swing trading? Yes, you just do it on a larger time frame. I mean, if you get an entry that's based off of a setup on a 60-minute or a 45-minute chart, it has the potential to become, a swing trade. And the way that Denise and I have been doing it lately, if we do not have a large enough gain to keep something overnight, we won't take it overnight. And so we haven't really had anything overnight for quite some time. I think she wants to, start looking at that, but, just haven't seen it. So we just take what the market gives us during the trading day. There are, as far as the daily charts, that's where you might want to take some of the swing trades. Again, the Twitter site, where you just look up Fibonacci Queen on Twitter, and all of the charts that I've posted in the past few months are still up there. You can download some of those. Now, a lot of the charts are dailies. For example, I showed a sugar setup before it occurred, and it just made target 1 on Friday. So it was a nice move, but it occurred over, I think, a couple of weeks. So if you want to look for a swing trade, ideally you're going to want it to be something that's in agreement with a daily chart. So that's a good example to go back and look at. let's see, what other, I can only see, okay, one person is asking who's Denise. Denise is my trading partner. Actually, I just do the analysis all day long, and she trades, and her and I have started managing accounts together. But I just do the work. She does the entries and all that. Okay, there's a question. I'm just reading the questions from the bottom. I guess they're being scrolled up. Okay, one question is, how do the setups work with Forex? They work fine if you stick to, I would say, at least 15-minute charts and higher. Better yet, I really like some of the 60-minute charts, 120-minute charts, and daily charts for the Forex data. But one of the markets that I do daily is the euro. So I do the daily euro chart, and then the trade setups in the chat room are on the 15-minute euro. Let me see. Okay, there's a question from FibDude. It said, I have a level, price takes out the previous swing high, now it's pulling back, you enter at 50%. And then where's the rest of the question? When somebody asked about where to learn about the setups, the book is the best way. The book is an inexpensive education. I do not make a ton of money on the book, but it's great as far as getting people up to speed on what I'm doing. Okay, somebody asked how long does the other section run. I assume you're talking about the webinar. I'm scheduled to go until 2 p.m. Eastern. So we've got another hour and a half. Okay, somebody's asking about Euro stocks, and I have no idea. I've never looked at that. Okay, one of the questions is, what's a tick chart and how can you find it on eSignal? As far as eSignal is concerned, I can show you here. Okay, you should be able to see my charts now. When you ask for a chart, normally if you're asking for a 5-minute chart, you would type in 5 and it gives you a 5-minute chart, right? So instead, you type in 889T, and that's a tick chart. And it switches it to tick charts. Okay. I'm going to go back to a 15-minute chart on that one because I'm going to go over the one of the bond setups. Okay, there's a question. When you just use the prior swing high to be taken out, is it important to even look at the CCI or TTM squeeze? Some people want to keep it simple. They don't care about the indicators. But if you've followed an indicator and you see that it has value, then you should put it in your plan. But why don't you test it both ways? You don't have to. There are a ton of people who do not use CCI or the TTM squeeze. They just want to see a zone hold, and if it holds, they put in an entry, and then go to break even as soon as possible. And they could care less whether the indicators are on their side or not. But if you want to make it higher probability, then yeah, look at the indicators. Okay, let's see. Okay, there's one question. Do you ever buy a partial one for the breakout and another portion for the pullback. No, I don't get that fancy with it. And again, Denise is doing the trading during the day. I attempted to try and do this work and trade at the same time, and it's impossible to do 25 charts and run a chat room and trade at the same time. I mean, it might be possible if you're not doing the type of work that I'm doing. Okay. I haven't done anything in the bonds in quite some time, so one of the things that you want to look at is to define which tick chart you want to use is pull one up against a zone, okay, and see if you can see the swings well enough to identify a low-risk entry against the zone. And here, this example, this is an 89 tick chart. Oh, it doesn't look like you can see my arrows here, so I'd have to use, do I have a pointer? Let's say if it triggers too far away from the zone, you may have to use a lower tick chart. So if this is 89 tick, then try 55 tick. Okay, and it might be easier in this case to see swings. So let's say, for example, on the chart that I had shown you was an 89 tick, and it doesn't look like you would have gotten a signal until this first line here. But if you get it down to 55 tick, let's say, for example, you had a support zone where I put this low line here, okay? And if you use a 55 tick, then this first line, or the 55 tick chart, is going to get you in much quicker than this second chart when it was 89 ticks. So, if you don't have somebody that has experience with it, that's how you can kind of go back and look and decide, what's going to work. You have to look at it and say, well, what tick chart with using prior swing highs and swing lows would get me in relatively close to a price cluster zone where the risk is well defined. So that's one way to look at it. I know most of the people that are doing the S&P are doing anywhere from 89 tick to 233 tick in the room. But as far as some of the other markets, I have no idea because it hasn't been something that I've actively been doing. Let's see what other questions we have. Okay, and why do I never use the DT oscillator? You know what? I've heard it's really good, and I just don't have enough room on the charts to do that because I started with a base chat room, and people loved the CCI and used those indicators, and I never switched it to using the oscillator. That doesn't mean it's not a good indicator because I'm told it is very good, and some people kind of use that as part of their entries. So, if you like it, use it. You don't have to use what I use or what I'm suggesting. I just want to give you guys ideas of what you can use for a trigger entry. I mean, you can use something, as simple as a moving average crossover if you want. Do I have one to recommend? No, because I prefer this other method. But again, if you wanted to do that, all you would do is, try and find a combination of moving averages that when it did trigger, it was relatively close to, the zone. Okay, let's see, another question. Do you move the initial stop after you get the first target and second target? I like to move the initial stop to break even as soon as possible. I'd have to go back and look at some of the settings that I have on NinjaTrader. You want to kind of give it enough room to breathe, but definitely to start, trailing up the stop and trying to get to break even as soon as possible. But again, it's not, I can't really give you a given or an exact level, because it really depends on your comfort level and the risk parameters that you are comfortable with, not necessarily what I'm comfortable with. Let's see. Okay, another question was, in this scenario where you didn't have a quick pullback, but a pullback came later in the session, as long as it's holding above a zone, a pullback is okay to take. I mean, I guess it depends on I would have to be looking at, a particular chart. If the market was really, really stagnant, maybe the odds aren't so great of it holding. But for me, as long as there's, a pullback and then something that tells you, well, sometimes you'll actually use another trigger after a pullback. Okay, you can do that, or sometimes you'll just take the pullback and then place the stop underneath the low. Okay, yeah, question is, do you use a trailing stop for a runner? Yes, but like I said, with what I'm doing with Denise, what I typically do, if we enter a trade off of a 15-minute setup, I will set up the, she likes to give it a little bit of room to try and get the bigger target, so I will use the symmetry on a 3-minute chart to trail up the stop, and then she just adjusts the stop manually. One of the questions is, why don't you just enter a limit with a fixed stop? You can do that if you want. I mean, I think that 3 out of 4 times that you do get a pullback, but you're right, if the market is strong and it's against a really good setup, you may never get the pullback, and that's fine as long as you're willing to sit through, the number of times when it does pull back. You have to leave it enough room. All right, I already gave you my Twitter name is Fibonacci Queen. And okay, momentum indicator. In the case of the squeeze, it's when I'm using this chart. Actually, this is not set up correct for this one. Okay, two-step pattern. If you want it, for anybody who is a member of the website, or if you became a member to take advantage of the price on the webinar, I have at least 10 webinars that are up there that you can view. I have one on symmetry, I have one on the two-step pattern, I've got 3 on timing, and all that good stuff. I also have other some other charts on entry. There's the trading blog, which also shows a number of entry setups, where I start with a basic pattern or a basic setup, and then again show the trigger chart. There's also a few examples on that trading blog that shows what somebody else used as an entry, that may not be the same, but similar. Let's see what else. Okay, we know about the slides, and Okay, there was one question, do I use market internals? No, I don't. I don't have time to look at it, and I've never really needed it. I do know some of my traders do look at it, and it helps them make their decisions, but I do not use it in my decision-making process. Another question is volume ever a part of my work? No, I don't use that either. Does it have value? Yes, absolutely. It does have value, and somebody else who makes a good study of it might want to add that as a nuance in their plan, that you only do something if there's a certain amount of volume, or you don't do something if there's low volume. Let's see. Okay, here's a question. Do I ever use a failed fib setup as a setup the other way? I don't. I set it up on the flip side after it fails. So instead of saying, well, if it breaks this, and some of the traders in the room do that, and that's fine. But I don't ever want to give away the edge. So what I prefer to do is, if let's say a buy setup is violated, and the market gives me opportunity to set up the sell side, on the same chart, I will set up the sell side, but not take the break of the other setup as a setup. Though some people do, and that's fine. Some people will use a break of symmetry as a trigger. So let's say, for example, I have a setup on a 15-minute chart in the S&P on the buy side, but there's bearish symmetry on the 3-minute chart. Once we take out the bearish symmetry, they'll take that as a buy trigger. But you do give away, a bit of the edge there, unless you wait for a pullback. Okay, let's see. Choppy conditions. Okay, another question is, how do you handle choppy conditions? There's one thing that I watch on the 3-minute chart in the S&P. If the 34 EMA is flat, be prepared to get chopped up. That's actually a time where you want to stay out of a trade. Okay, so if you see a flat EMA, be prepared to get chopped up. So you can either stay out or just play it really tight. If you see something in that time. And I think I'm almost done. And also, if the market feels choppy, you don't ever want to give away the edge. You don't want to buy the breakouts, or sell the breakdowns. What you'd want to do is wait for a pullback so you still have, a bit of an edge. Okay, another question is, why 89 or 55 tick chart? Yeah, I choose that, because I heard of the 50 tick that Hubert was using. I said, well, I like Fibonacci numbers, so 89, 55, 144, that's why I use them. Okay, here's a question. On occasion, you have a difficult time determining swing points at reversal when it consolidates for a while. Karen, I'd actually need to see a chart to, maybe point something out, but I'll see if I can find an example. If there's no clear definition, it might be better actually in that case to stay out of the market. But again, if I was looking at it, an exact chart, that would be another story. Now, I've just gone over some very, very simple ways to trigger, and not everybody in my room uses the same type of stuff. Okay, but I know that I remembered that I don't know if it was John Carter's niece that was doing the trading, when she was there for the summer, and I don't know how young she was, but she was a teenager, I think, and she was making money just using the squeeze on an 89 tick and following rules. Well, I thought that, if she could do that without qualifying the squeeze setups, if you use the squeeze setups in conjunction with my work, you might get even better results. So that's one of the reasons why I started, looking at, the squeeze indicator. And also I like the change with the color bars. I like the visual change. Let's see. One question is, when will you get a copy of this webinar? You should get it within a few days after. We usually send out the link, but if you do not get it within a week, then you can email support at Fibonacci Queen and ask for it. It shouldn't take too long to get the recording finished and posted. Okay, another question is for daily charts. Do I use Globex or daily sessions? I prefer using the Globex, for the daily charts. The only time that, I don't like Globex charts for my timing work, because, the night session can be really messed up, and it makes for very sloppy charts that, are not really symmetrical. But I do look at both. I will typically have an intraday chart that includes the Globex data, and then I'll have the other charts that I use with timing, like the 15-minute chart and the 45-minute chart. I do those day session only. But I do try and look at both, because they both give you different pieces of information. Sometimes you'll have a phenomenal setup on the Globex chart, and you won't see the same thing on the non-Globex chart. So I try to do both, see which one presents me with an opportunity, and then if there's a trade set up there, then you look for a trigger, regardless of where it started from. Okay, one question is the TTM indicator standard on eSignal? No, it's available through TTM on either eSignal or TradeStation, but it's not standard. I mean, you don't have to have that indicator. If you don't want, you can just use the prior swing highs. You can use, I think there's some settings for Heikin-Ashi bars, even on NinjaTrader. Some people use that. Actually, I think I have one of the guys in the room, fairly new trader. I believe that all he did was set up his NinjaTrader for 89 tick bars, and he would use the Heikin-Ashi bars, and when they changed color, that was his entry. Okay, there's a question, is if you're trading the YM, what would you recommend in as far as the setup chart and entry trigger? I love the 15-minute charts, because, they can give you a relatively low-risk entry, really well-defined, and if it goes, it can go pretty far. And I think that, I don't know, let's take a look. Let's see what the YM looks like right now as far as a tick chart, because I'm thinking 89 tick would probably work. 90-15. Okay, this is an 89 tick chart. And let's take a peek at a 55 tick chart. Let's see, there would be one entry bars swing high over here, and let's see if we bring that down to a 55 tick chart, whether it makes a difference. Yeah, it looks like you would get some other entries. I'd say either a 55 or an 89 tick chart. There would be one over here. There'd be another one over here, taken out a prior swing high. Okay, let me see if I have any more. Okay, one question has, have I used TTM anchor chart? You know what, I'm not 100% sure of the rules, you know, as far as the anchor chart, but I tend to agree with, you know, you should trade in agreement with, you know, the next higher time frame. So, you know, with the indexes, for example, being bullish recently, nice patterns of higher highs and higher lows on the 45-minute chart and the 15-minute chart, you know, I really want to take the buy-side setups. You know, I would consider the 15-minute chart an anchor chart. I don't know if that's the proper way, you know, according to how TTM talks about it, but 15-minute chart as, you know, a base chart. And if that's bullish, take the setups on the 3-minute chart on the buy side to be in agreement with that chart. Or just take, you know, the squeeze triggers that are in agreement with that higher time frame chart. Okay, the PowerPoint is, there is something I think that says file share where you can download it. But if you can't find that now, we'll go over that, you know, after we quit. Priyanka will tell you where to get that. Okay, I think that I've answered. I think I've answered most of the questions. So what I want to do now is actually show you some examples of entries against recent setups. So you see it kind of in action, but I also want to show you how I would trail up a stop for Denise. So first let me start with, I just want to show you this bond trade, you know, and give you an example of what is the thought process. I'm actually going to look at a 15-minute in this case. I'm not sure how to get rid of the day session stuff here. There's probably a better tick chart to use also. Okay. All right, first let's start with the setup. So if you have a trading plan that says that you can, you know, take a trigger against a price cluster setup, then in this case, okay, I'm looking to see if I have a pointer. Okay, well, I'll just tell you where it is. In this case, there was a wide cluster between the 114.28 to 115.12 area on the daily chart in the bond, okay? And at the same time that we were approaching this price cluster zone, and actually you could break it down into you know, a tighter zone there, because really a bulk of the cluster came in between 115.06 to 14 area, okay? So that was the zone we were watching for a key price decision on the daily chart. And it just happened to coordinate with time cycles for a low that you can see with the histogram that's right underneath there. Let's see if I can move the marker. I'm sure, yeah, you should be able to see the marker. And that's where time and price came together. So what you wanted to do at that point, since this was a daily chart, was, you know, maybe go down to the 15-minute chart. That's the one that I look at during the trading session, and see if the pattern shifted, because you know that the market was going straight down into the low that was made at 115.13, right? So you want to go to the trigger chart, and probably not too micro. You probably could have used a 5-minute chart also. But here, you know, you've got to see the market take out a prior swing high. Something to indicate Oops, I just lost that chart. Make sure that one stays up here. Something to indicate a reversal. So I see a couple of different places. So if the market was going straight down into this daily zone, you can't see the daily zone on this chart, but you know it's there. Once it started taking out some prior swing highs, you could look at the buy side. So you start with a trade setup, which is the cluster at excuse me, anywhere from the 114.28 to 115.12 area. That was a setup. Once we held, you look for the trigger. Trigger is taken out prior swing high. Initial stop would be underneath the low that was made prior to the reversal signal, so that would be 115.13. For anybody who would prefer to give it more room, your stop could have been underneath the extreme of the cluster zone, but I think that's a little bit too much to risk. So I don't think that's reasonable in this case. I like the idea of just having it, you know, a touch underneath the low made prior to the reversal signal in the case of a buy. Okay, and then you go from setup to trigger an entry, and then manage a trade, which, you know, for some people will just be, you know, using a trailing stop in increments. Every time that the bond moved up 5 ticks, maybe trail up the stop, you know, to 5 ticks away, that type of thing. So that would be, you know, managing it. Some people would prefer to just wait until it takes out a prior swing low on the flip side. So, for example, you know, I'm going to give you some alternate ways to trail a stop. So let's say one way would be just letting it take out a prior swing low on the flip side to indicate a reversal. So that could be one place to trail a stop. Okay. Another is, you know, automatically, just every time you rally 5/30 seconds, you have NinjaTrader automatically, you know, move it for you. And then another way, which this is not a great chart for it, I really would prefer using, let's say, a 5-minute chart, but just to give you an idea, I would use symmetry. So if you take a prior swing and then project it from the new high, as soon as we took out the symmetry, whoops, that took us all the way to the end. Where did it take it out? All right, this is an old decision, so I'm having problems finding it here. Okay, here it is. So let's say once it broke the symmetry of this swing up, and that would have been 117.23, so maybe you'd have a stop at 117.21. Okay, then you'd be knocked out. So there's a number of different ways. You just want to choose a way that you prefer and, you know, use it consistently. Or you can use one or the other. You can say that I'm going to stop this out either if we break symmetry or we take out a prior swing low. Again, that's going to be, you know, up to the individual. All right, let me take a look at. Okay. Let's say we got involved in a trade. Let's see. Let's say with yesterday's trade, my prior swing high. Let's say if you had gotten in at the 964.5 area, and the market started going in your favor. Maybe you took off a couple of contracts on the way up, and then you're going to try and keep a runner. Well, one of the things that I'll do is run the symmetry projections to help trail up a stop. Symmetry projections are run using 3 points, and this tool here in the trade station, it's actually called an extension tool. In e-signal, it's actually called an extension tool. It gets very confusing. I go over that in the book. Bottom line, no matter what they call it, it has to be the tool that allows you to use 3 points and run 100% projection of a prior swing. So if I take that, and I'm looking at, comparing swings in the same direction and to trail up a stop, let's say every time a market starts coming off, I might want to put the stop underneath a symmetry projection of, these prior swings. So let's see, after we make a new high, I'm going to run a new projection. Okay, and then, this will help give you an idea of how to trail up a stop. And again, this is typically what I'll do. Actually, I'm using this larger swing down here. Now, let's say initially I was using, the symmetry of this largest declining swing on the left hand of the chart, but we got up to a 1272 extension target. You might want to trail it even tighter. That's what I would tend to do. So I might take some of these smaller swings and say, okay, well now I want the stop to be underneath these tighter projections from these smaller swings. So that's one way to trail a stop. The other thing is just, again, and this can be on a tick chart or a 3-minute chart. Again, depends on how tight you want to play it. So let's say if you're just trailing it up underneath, since the market's rallying and you're long, you start trailing it up underneath the prior swing lows. Now, sometimes that's going to work for you, and sometimes it's not. Because, for example, if you trailed it here, underneath this swing low, you would have gotten knocked out, and then you would have missed this part of the rally. Sometimes that's going to happen. That's one of the reasons why I kind of prefer using symmetry, because the market respects symmetry more often, I think, than prior swings, believe it or not. But again, if you want to tighten it when it gets towards an extension, then I might use a prior swing low instead, or the tighter symmetry. Let's see what other markets we can take a peek at here. Recently we had the S&P stall at the 1272 extension of the prior high to low swing. Let's see if it shows up here. Yeah. So 976.87 was the price extension. So, pretty much round that out to 976.75. The actual high initially was made at 976.50. Okay, so that was within a tick of that extension. That's when I wanted everybody to tighten up stops relatively tight, because not only was it an extension, which is important for any swing, but it was a daily extension. Okay, so typically on the first test of any of these, you will, see some sort of reaction. So that's when you definitely want to protect yourself. So let's say if we went and looked at, not sure how much data I have on this 3-minute, 970. Okay, better look at a 15. Okay, it would start here. Okay, now obviously you will get a quicker entry on a tick chart, and there were people who did, take this trade. It was counter to the shorter term trend. It was counter to the larger trend, but it was a major extension. But the first indication on this particular chart, this is a 15-minute chart, would have been a break of the 972.25 swing low right over here. Okay, and then at that point, we looked at the shorter term chart and favored setting up the sales on the shorter term chart once we broke and started shifting patterns here. Okay, so then that's when we started looking for at least a deeper downside correction within that healthy uptrend until we came into that next setup after breaking quite a few other support relationships. We finally hit a zone that came together with a few price relationships where the market held and triggered. And this one, actually, yeah, I showed you the example of that trigger. It's in the PowerPoint. This one, you actually would have seen a relatively low risk entry, even on the 3-minute chart. That wasn't too far away. But it doesn't always happen that way. That's why I like the tick charts. It gives you more to play with as far as the entries. Here, you would have hit that zone of support down here. Low was made at 962.5. And once it took out 964.5, you could have gone in. Now, for some people, they'll say, well, that's too far away, from the support here. But, the upside potential off of that 15-minute chart, once you made that low, was 980. So is it really too far away? Not necessarily. If you can have a decent risk reward in the market, then maybe not. Now let's see what else we have here. The euro. This is fun. I really like when this sets up. In the euro, I noticed that we're getting into some daily resistance that came from projecting this prior low to high swing and projected from the new low. And that gave me 142.98 as a decision. And then also I took the prior high to low swing and ran the extension, and the 143.03 area came up as the 1272 extension. Now I also noticed just by eyeballing it that the swings in time looked the swings in time look very similar. So I just used the price labels in DT. Again, this is where you can choose what to label. So I usually label the date, the price change, and the number of trading bars. Okay, so from this low to high, I knew that it was 11 trading bars. And then I clicked on the low to the high that was being made at that time, and it was also 11 trading bars. So that was time symmetry, similarity or equality of the swings in time. Okay? So that was one thing that indicated resistance to me, besides the fact that, let's see, you could also get something similar using the timing histogram. Okay? I don't always like to look at that because the calendar days kind of makes it look funky. But also, if you measured the low to high, the prior low to high, you could see up here that it was 466 points, and that we were currently, or at that last high, 462 points. So that's symmetry also. It wasn't equality, but it was similarity in the swings in price. So you've got equality in time and similarity in price. Do you want to look for a change in trend? Absolutely. So let's say in this case, okay, this is the setup. It is counter trend, okay? But if you can go to a chart where you can see a shift in pattern where the trend changes, then you have a relatively low risk trade set up. So let's take a look at what a 5-minute chart would have looked like. Okay, 142.94. Oh, that wasn't where it was made. Okay, here's the 142.94 that was made on the 23rd. Okay, we need to go back further. Okay, here we go. Here's where the high was made into time and price resistance. So that is your base setup. What would be the trigger? Well, if you use a 5-minute chart, you might not get the trigger for a while. If you use a tick chart, you're probably going to get it sooner. So I'm going to show you both ways. In this case, let's get rid of some of this data over here. Here's where the high was made. Let's say that once it broke the symmetry of this last swing up, some people would consider that a trigger. I'm talking about this swing up here. Now, there is a trigger that would have shown up much quicker on a tick chart. So let me see if I can call that up. Maybe a 233 tick. Let's see how that works. 6. Oops, we need 6E. U9. And I need the 23rd, 142.94. I usually like to take the snapshots a lot quicker because sometimes it's kind of hard to go back and look for something in the past on the tick charts. I know it's over here. Ah, shoot. Okay, that's why that happens. Okay, I want it to get it over where it made that high at 142.94 and show you how much quicker you would get in by using a tick chart. Okay, here it comes, here it comes. Okay, it probably would show up a little bit more easily on an 89 tick chart. I don't want to try and mess with that right now, but I'm going to show you what, where it would be obvious. I mean, if you have an extremely well-defined zone via time and price, okay, where you could have placed the stop right above 143.03 in this case, and this is, a 233 tick chart. You really need to see it on an 89 tick chart, but because I'm having problems pulling over this data, I'm just going to, give you a rough idea of where it would show up. And it would have been on a break of this prior low here, which was 142 like 86, so let's say 142.85, and the initial risk would have been underneath, just above this swing high, or the top end of that cluster above 03, but the high was made at 142.94, so stop could have been right at 95 or 96, depends. You want to put it one or two ticks above, and that would have been your entry. And it never looked back. This was a very, very healthy decline. So again, the program is to pretty much have a setup. If you hold the setup zone, you look for a trigger. If you get the trigger, you make the entry. And then if you make the entry, then, apply your money management techniques, whether it's, trailing a stop, all the way on all the contracts, or getting out of partial contracts at a set, a predetermined amount of ticks, or what. But again, you have to, fine tune the trading plan according to your own personality. Okay, let's see. So everybody kind of getting the idea of, what I'm trying to show you as far as entries, because, the setups, great. There are a ton of setups that are blown through every single day, and that's why you want to use triggers to qualify which ones are worth making an entry against. Okay, let's see what else we have, and then if you have any more questions about triggers, let's take a look at those now, and then if you want to, for the last half hour, we could look at current markets if you're interested in that instead. So let's see, do I have any new questions from what I just showed you? Okay, Priyanka, I don't know if new questions are going to come in on the top, or if there just aren't any questions that weren't answered. Okay, wait, I see a couple questions. When I have a level, do I want the price to be tested or pierced? What if it comes close but not to touch it? Okay. As long as, I have it written in the trading plan that as long as it's within 3 ticks of the zone or in the zone, so it could be 3 ticks above it, it could be in the zone, or it could be 3 ticks below it. Then you go to a trigger chart and you look for the reversal signal. So yeah, more than a few ticks, I throw that setup out the window. Now it doesn't mean that you want to reverse it. It just means that setup for me is not good anymore. And if it sets up on the flip side, that's another story. Okay, one question was I talking about the Euro futures. Yeah, that was the Euro futures chart that I showed, that example with the alternate time projection. Let's see. Okay, good. I'm glad that it's funny because where I'm looking at the charts that I'm showing you, the mouse doesn't show up, and I forgot that that's how it works. Okay, somebody says that e-signal has XTL bars that change color. Okay, well, you want to test it and see if it works. I know that this is going to be, this is definitely recorded, so if anybody wants to go back over some of these things, we can do that. The default settings. Okay, do I use the default settings for the squeeze? I think so. Let me check. Where's the, what do I do under edit studies? Oh yeah, the length, I think if the default is 20, that's what I have on these. But I think that I've played with it both ways. Let's see if there might be another. Okay, here's a question. When a prior swing high is taking out and you do a lower low, meaning that you get stopped and then you go up again, how do I handle that? You don't do anything unless your plan says to take the next trade setup. I mean, you really need to have something written down that says, you know, this is acceptable and this is not, because otherwise you will start getting into chopping yourself up. And you do not want to do that. So sometimes it really sucks. You know, you'll be in a good trade and you use a trailing stop and it stops you out, and then it goes in your favor. That does happen. You know, you can do one or two things. You can change your plan to use a wider stop, or you can just live with it and wait for the next setup. Not every trade is going to be a winner, but if you work with the parameters and test your parameters first, you should have, more winners than losers, and that isn't even as important as letting your winners ride, because you can have only 50% of your trades win, and as long as you manage it correctly, you'll still be up money. Okay, tick chart. As far as the tick charts, from what I understand, and I'm not the expert on this, it's like the program will not paint a bar until you have 233 ticks, and then it will paint the next bar. But again, you're probably better off asking a person that works for TradeStation or eSignal. And let's see. Okay, let's go into, here's a question. What percentage of one's capital should one risk on each trade? You know what? Denise is the money manager, and I think she says 1%. I mean, I know that, but let me see what we're actually doing. I think for each $10,000. Maximum, no, I think that's as if it was $25,000. I don't think that the stop is more than $250 per a one-lot trade. But I don't know. I'd have to go back and ask her. All right, current markets. Let's go to current markets. S&P. Well, one thing about this market is, hey, don't stop on me now, charts. Okay. Is, I call this cautious bull mode. Okay, wait, I see one more question. How do I deal with news events? You know what? If you're afraid that the market's going to get insane, like during the Fed, you can stay out of the market. But your risk is extremely well defined. If you can have a stop in that you don't feel will get, well, you won't get raped because there's some crazy piece of news coming out, you have your stop in. I mean, it's the risk here is really defined by the levels. But if you think that the market could get extremely wild, then maybe you just want to stay out of the trade. But otherwise, use the same parameters. You know, if the zone's going to hold, it holds, and if not, you get knocked out. Here, you know, the reason why I say that I'm a cautious bull in the S&P is because the larger pattern is bullish on the daily chart. The general pattern is higher highs and higher lows. Once we took out the bearish symmetry of this last swing down, which was, you know, a nice healthy correction, once it took out 100%, that's what I mean by symmetry. I'll show you the projection. So once we took out this 912 area in the S&P cash, and I believe it was 909 basis per contract, that's when I started telling people that the call was for at least a deeper upside correction back to the June high, and possibly for an extension of 1272, which is the target that we just met in the last couple of trading sessions. So because we've met targets where many moves tend to terminate, I'm a cautious bull, okay, because it's still a bullish pattern. And if we blow through this 1272, I don't really have any meaningful resistance until 1009. The other reason why I'm a cautious bull and why you would want to, you know, trail up stops even tighter is because we have some time parameters coming in that are suggesting a possible high. And that doesn't mean that you step in front of the freight train. That is absolutely insane. Okay, but we know that we have some resistance coming in here with cycles, time cycles, early next week. And then August 3rd, 4th stands out nicely. If you look at taking, I took a low to the high swing and projected it from the low made on July 8th. And 100% in time comes in on August 3rd. Then there's also, if you take, and the highs are a little bit different on the cash versus the contract. I believe on the contract it's June 5th, but on the cash it's June 11th. But I did run that time cycle of the June 11th high to the July 1st high, and there's an overlapping cycle that comes in 1618 on August 4th. There's another high to high swing, so the May 8th high to the June 11th high, 1618 in time comes in on August 4th. And then, let's see, is it going to be this high to low? Let me get rid of this one and run this timing again. I think the June 11th, yeah, the June 11th high to the July 8th low. I always get rid of the lines that the market's already gone beyond. Why isn't my eraser working? And 100% in time comes in August 4th. So there's 4 cycles between August 3rd and August 4th. If the market is still rallying into that time window, that's one of the windows where the odds are higher for a reversal to be seen. So that's definitely when you're going to start looking at reversal indications. And if you start seeing them, let's say, for example, on a 15-minute chart, then you might want to take the short sales that show up on the 3-minute. Okay, so in the S&P at this point, cautious bull, next potential target up at the 1009 area, which for the contract, where is that? ESU. Here's my ES daily. Here it is. Next target would be the 1007 area here. Now, I also know that this next area will overlap some weekly resistance. I have that, I think I did a chart of that in the chat room the other day. All right, let me see. I'll grab another couple of questions, then we'll look at some other charts. Okay, one of the questions is, can you only do one entry per setup, or can you try more than once? You can absolutely try more than once. If there is a setup, okay, on this 15-minute chart in the ES that I'm going to show you, okay, this was that setup from yesterday. There were multiple potential entries as long as the original zone held, but that's, the first test of a zone is really the highest probability, set up there. But there were other times that you could enter the market knowing that the potential off of this trade zone, which was never violated, was to the 980 area. And, we ended the day without getting up to the zone, the target 980. I didn't really look at Globex stuff. I don't know. When is that? Does that trade tomorrow? Or I don't know. I try not to work after the market, the pit closes. But there were a number of different times that you could have, looked at an entry with this original setup in mind, or there are times where you will retest a zone, and you can take it on the retest if you get a trigger. The odds are not quite as high on the retest as it is on the first test. So you want to keep that in mind, and for that reason, you do want to use a trigger. Okay, let's see. Statistics on the trading on the account that Denise and I are doing together. I have stats for. I'm thinking it's. Let me check. I think it's on a year. I think it's 39% since January, I think. But if you want that information, you can email me and I'll email it back that we have the stats up till June. Question was, how did I get 9/12/38 in what? Was that on the S&P cash? Oh, okay. S&P cash chart. Here we go. Okay. All I did in this case was I was looking at the symmetry of this last swing. So I took the prior low to high swing, which was 43 points, 43.06, and projected 100% of that from the low made at 869.32. That gave me the projection of 9/12/38. And once we cleared that by a decent margin, that was when I started talking about, if anybody that has been watching my end-of-day updates, that's when I started talking about not looking for failure as much anymore, but the potential for at least a deeper upside correction. There were people that were, all talking about this head and shoulders stuff, and I said, well, yeah, maybe that could happen, but it would have to fail here and underneath here, and it just never failed. So taking out symmetry always tells me to look for at least a deeper correction and possibly more. Sometimes it's a more important reversal. So in this case, it ended up being a more important reversal. So again, I did a whole, I don't know if it's a 1 hour or half an hour webinar on symmetry that's in the member section that you can view. And let's see. Okay. The question is, if you have a cluster of levels, do you take the farthest one? No, you wait and you see if the zone holds and if it triggers. So it's not, first you have to see where it holds. Okay, so are you asking the question, do you take the buy, in this case, at the 961, 962 area or the 958, 959? You wait and you see which zone holds, and then you go to a trigger chart. That's what defines your entry, the trigger chart. Yes, and from the time that we cleared that 100%, I had the bias for at least the deeper upside correction and possibly more, and at that point was able to state that the target, in the case of, what is that daily chart there? In the case of the S&P was 976. If you can go back to the old videos, and I do not remember what I said, but I'm pretty damn sure that I started giving you a target of 976. And it could have even been over here. We didn't know at this point if this was going to be a major low, but I knew that if it held, an upside target was going to be 1272. But I had a much better idea that it would head toward that target once the symmetry of this declining swing was cleared. Okay. Okay, it looks like we're done with those questions. We've got another 10 minutes. Now here's another interesting chart we want to watch. This is the Russell, and it's a 15-minute chart, and the general pattern is higher highs and higher lows, okay, uptrending. But we want to watch for a possible termination of the move, either around the 1272 extension, the 549 area, or the 552 area, because many moves tend to terminate at extensions. But does that mean you just go ahead and short it at 549? No. You go to a tick chart if one of these areas holds, and you wait for it to break down and show you the reversal on the lower time frame. Now what's interesting in this case is not only do you have this, these extensions in price being met, you have extension in time of the high to the low swing. 1618 in time came in pretty much at the close. So does that mean we're definitely going to roll over on Monday morning? No, not necessarily. But will we watch for it because of those factors? Absolutely. So that's something we'll watch. Let's see. I've got a decision coming up in crude oil. We've got two retracements that we want to watch that overlap a 1618 extension of a prior minor swing. Now, if you get a 618 on a daily chart, a lot of people are going to be looking at those larger, retracements on daily charts. And a lot of time, maybe it is a self-fulfilling prophecy sometimes, but not all the time. I take the stuff down to a 1-minute chart. You can't tell me that everybody's looking at a 1-minute chart all the time and creating and making these levels hold. It doesn't work that way. But here, at least I believe it doesn't, we have a big decision coming up in the crude oil. This is September contract at 68.48 to 68.78. So let's say that we get up into this zone and the market stalls. What do? Go to a tick chart and see if it takes out a prior swing low on that tick chart. And if it does, you can take a trade and risk just above the high. Not going to be sure about the reversal. You can't be sure about anything. You're playing the odds. You know, it's just like, do you have a good starting hand in poker? And if you do, you play the hand. You're not always going to win. You can have a pair of aces and get shot down. So no, you cannot be sure about it. Who can be sure about anything? I can't be sure that I'll be alive tomorrow. I can be sure that I'm taking my vitamins right now. Okay, so that's in the crude. That would be a setup, and use what I showed you today as far as a trigger. Test it. Don't assume that this is going to, happen or work. Test it first for yourself. Check the parameters, and then when you're comfortable with it, then you can use it. So we do want to watch for possible reversal in the Russell. You have the levels in the crude. Let's see, what else do we have? That we're getting a little bit extended. We're getting into the position to terminate a rally on the daily charts. But if you don't get any reversal signals, don't mess with it. Don't mess with the counter trend stuff. Oh, sugar was a great chart. I want to show you that one. Let's see if I can open, save the workspace. Okay, one of the questions is, do you use the daily for setup and a 15 for entry? You can do that. I like to see at least a swing high or low on the daily chart taken out to indicate the reversal. But then if you want to fine tune it, you can then fine tune it down to a 5-minute chart and tighten up your stop to literally 2.5 S&P points. Okay, this is sugar. I posted this on Twitter a couple weeks ago as the market was, pulling back. Now, I really, really, really like or prefer this type of setup because you're looking at a gorgeous pattern of higher highs and higher lows on the daily chart, and all you're doing is setting up an entry where I'm taking similar corrective declines in the past and projecting them from the new high at that point, which was 1809, and that gave me this zone for an entry in the sugar, right? We can try and look at a chart to see whether or not we had a 15-minute trigger there. But first, I want to show you on the flip side. Now we're getting to a place where we could terminate the move. Now we're going to have a time and price setup here. Okay, I both have some resistance and I have timing that I projected from, let me double check this one, from the last low. I'm going to run the time projection report, and Monday's the 27th, so I'm going to do it from Friday the 24th, and let's see, where's that histogram stand out above 50? That comes in right around the 30th, 31st. So I'm saving this histogram below the chart. It shows the next timing for a possible high to be right around the 29th, 30th, 31st, right around there. Give or take. This is a calendar day projection. That's how the histogram works on the daily charts. And let's say, for example, we continue to rally towards these extensions on the daily chart. Well, this setup, even though it would be a time and price setup, would not be as high a probability setup because it's counter to the larger trend. But if you work it correctly, using the lower time frame charts to make it safe, then we're actually going to look at a possible short if sugar gets up towards this next area of resistance, kind of matches up with some of Denise's work, into the time window, followed by a reversal on the 15-minute chart. So let me see if I can get you a 15-minute to show you where we would have triggered the buy. This was October, right? Okay. And what was that price of that low? Oops. I think I need to see some more bars here. No, that's not showing me enough data. For some reason, the data is not coming in. Let me try a 30-minute chart just for kicks. Okay, the low is 1675. Does this show it? Okay, I'm having a problem getting all of my data here. So it's not showing me where it would have triggered. Let's try 60. Probably doesn't do it either. Okay. All right. I don't know why I'm having. Oh, here it is. Okay. I really wanted to see it on a 15-minute chart, but this chart will also show you. Once you got down into that support, here's where the low is made at 1675. Okay, so after we kind of hit that zone, there might have been one false trigger here too, because I think when we hit over here, you were in that general zone, and it doesn't look like it took out a prior swing high over here. So that was, a little bit of a bounce, but ultimately it tested a little bit through that zone. But then, after that test, it took out a prior swing high here. Now once that occurred, and I knew that we had that daily support and pattern, that was when I wanted to be setting up the buy side on the pullbacks, at least until it got to the 1272 target, which was met on Friday at 1835.